Good morning, ladies and gentlemen, or is it afternoon? I don't know. I'll just give you a moment with a few introductory comments before I get on to my slides while you settle down. I was just chatting to somebody out in reception about the problems today, and I think I've been in a few different businesses, shipbuilding, banking, shipbroking, research, and I think if I was a ship owner today, I would really be wondering what I ought to be doing. And I guess that sort of we were chatting about this, and it sort of ties in with the title of my few comments this morning, which are not going to be very long. Where's the industry going after 3 decades of no change? What's next? And I guess the title came up because I said to Nicholas, not much has changed recently. And he said, well, that's not what our audiences think. And what I want to do is to explain to you what I mean by that not much has changed, and to tell you what I would do in the unlikely event that I was running. I forgot to mention farming, actually. I had to spell farming, which is, it's quite like shipping. It's sort of heavy on assets and slim on net revenues, Just to get us started, the things that haven't changed are the underlying fundamentals. The world industry drives shipping. It's very volatile, and in this chart you can see, I think, that this is world industrial production, the line. The bars is sea trade, and you don't need a PhD or just chat GPT to tell you there's a good correlation here, and that your lives, and mine for that matter, are very much driven by how these lines oscillate along the chart. So that hasn't changed. There's something funny on the freight rate. When we get to the freight rates, I've spent my life collecting ancient freight rates, and I've now got almost 300 years of them. They're genuine rates. They're all based on somebody who got paid for their ship. And you've got basically 22 cycles, as you can see here. These are the numbers of the cycles. Some of them wonderful, some of them not so good. And if we just take a look at the average cycle on this analysis, and there's many ways to analyze it, but just dividing the 22 cycles into the 280 years or whatever it is, you get an average cycle length of 13 years. And I don't see why that should have changed. I reckon if you're planning for 2050, you probably can assume there's going to be 2 cycles, and the only thing you've got to worry about is whether they're going to be the sort of mega cycles like cycle 21. That's this one here, where everybody got extremely rich, and or whether they're going to be one of the smaller cycles. But there's another way to look at these freight rates, and that is these are market rate. Believe it or not, these are market rates. You won't find many other commodities where the price over 300 years has been almost flat, but shipping has. And if we deflate these using the inflation index, then this is the chart that you get. You find that since steam arrived in 1815, the real freight rate, the cost of freight, which is really your business is in delivering cheaper freight rates. That's what shipping's there for, has fallen by 97%. And so what we're really wondering here is what caused this. And in fact, the model underlying this 97% decline in trade are really the ingredients of the model that you're struggling with today, because suddenly some of these underlying ingredients have become very volatile and you're not too sure where they're going. And without doubt, the biggest is energy, which started out from wind over, we kick off here and we've got wind energy. we've got coal, we've got oil at $2 a barrel. That really kick-started tankers. Then oil after the oil crisis went up to $22 a barrel. And if we go over the last 30 years, what has changed is gone up to $76 a barrel average. And, you know, when you start to pull all this together, and we'll get to synthetic fuels, it's a brave man who will predict what the cost of energy is going to be in the next 30 years. And I'll come on to that in a minute. The second element in this is the propulsion system. And a big contribution to cutting the cost of shipping has been getting a better propulsion system. And we started out with sail. We got steam engines. The steam engines got much, much more productive. The triple expansion engines were many times more productive than the original ones. And then we've got slow-speed diesel engines, which actually hit their thermodynamic peak sometime in the early 80s. I remember being told that by a very senior marine engineer in 1981, and I don't see, I think it was true. The diesel engine has not in itself got much more efficient. It's sort of stalled. And so what we're looking for is some way to move the efficiency of the propulsion unit along. And whatever else you do, it's probably not going to be the internal combustion engine that contributes to that. The logistics is a very, very big part of this. The trouble is it's almost impossible to quantify. But if you just take a look at the way the logistics contributed to cutting the cost of trade. I mean, you started off, all the voyages were speculative. You know, you bought a ship, you got a cargo, you traded it somewhere where you hoped you could sell it, you hoped to pick up another cargo there, and if you couldn't, you sailed around till you found one. And then, of course, we got the communications revolution, which comes further down here. And that meant that you were able to do tramp shipping and cargo liners operating very, very efficiently. And you took a big step forward because ships were sailing to schedules, you were able to manage the cargo, and shipping suddenly became a much more efficient business. And that took yet another big step forward after the Second World War, when we got globalization and bulk shipping led by the cargo owners. And that was the big bulk carriers and tankers, the container ships, and the specialized ships, the sort of car carriers, open hatch, etc. So the fourth item that comes down this list, which is the one that's been most active recently, is ship size. When you were running sailing ships, 200 tons was the maximum. You couldn't really do much more with the materials available. In 30 years ago, the average ship in the merchant fleet was about 19,000 tons. I know it sounds low, but there's many, many small ships. And in the last 30 years, it's doubled to 36,000 tons. But I would say in this period that the economies of scale in the very big ships has peaked out. I mean, I've been looking at the container ships recently, and the bigger they get does not necessarily deliver better cost efficiency. And so I think a lot of the economies of scale element is going to be in the lower end of the market. And then finally, we come to the one that I think has the most potential going forward, and that's information. We start at shipping. People talk about digitalization as something recent, but actually shipping was the first business to really build its business around digital technology. The cable in 1866, the cable system was introduced. That's I've got this right. There we go, it's there. And in 1873, Clarkson spent more money on cables than they did on wages, which, okay, brokers didn't get paid so much in those days, but it was a good whack. And what you were able to do was link a ship in Calcutta up with a cargo somewhere in South India, and you could do that deal at the Baltic, and instead of the ship sitting there for 2 months waiting for a cargo, you cabled the fixture, and off went the master, and he picked up the cargo. This is a massive move forwards, and I think there's still a lot of all these areas, the area where there's the most low-hanging fruit or medium-hanging fruit is in the information system. Well, the problem that we've got now is that in the last 30 years, the thing you probably haven't noticed is that the cost of freight has, after all these years, the cost of freight has actually started to increase, which, you look at it as high freight rates, but in reality, it means that the product that the shipping industry is selling is getting more expensive, and a lot of that's to do with higher energy costs. And the big question that we're looking at is how do you go, what happens going forwards, and could we be looking at something like this once you move into synthetic fuels and all the other things that are on offer? I mean, I still have problems getting figures for synthetic fuel costs, dollars per ton, out of people who are involved in producing them. They're very coy about it, but the calculations I've done convince me it's thousands of dollars a ton. This is not cheap stuff unless you have a big technical breakthrough. So if you are looking at that, how do you actually build your business to deal with it? You've got all these items: fuel cost, speed, propulsion, ship size, transport, logistics, communications, automation. How are you going to build your business so that you adapt new technology to put you at the head of the pack compared with other shipping companies who basically that's where the real competition is? And you've got these four, the reason for my comment at the beginning is that these are decisions. The decisions in the last 30 years were not as difficult as this. I mean, suddenly you're looking at synthetic fuels. You've got nuclear. It's going to be a long time, but you might be thinking about that. If you're a big container company, wind is possible, but it's limited. And carbon capture. You can't nail down a viable, nobody's really come up with a viable operation that you can tell the builder to put in and it will actually work, and you're not sure whether the cargo owners will pay for it anyway, because they're being very coy about all this stuff. So energy is a big worry, what you do next. So maybe you put in capacity to put in you fit a dual fuel engine and hope for the best. Propulsion. Well, as I said, the internal combustion engine's peaked out. It's not going to deliver any more efficiencies. Electric motors, brilliant. I mean, you get probably between the original green energy and the electric motor, you get 75% of your green energy back in propulsion, or perhaps a little bit less than that. But in those sort of numbers, if you have a synthetic fuel in a diesel engine, you're lucky to get 25% back. So if you can, it's what Elon Musk spotted with cars. It's a no-brainer. If you can get batteries and electric motors, you suddenly save 3/4 of your energy. So I think these are decisions, they're not there. You can't make this decision now because the shipyards aren't really offering something you can put in your cash flow. Then we come to the logistics, which I think has really great potential. This is where the shipping industry is a very difficult one for logistics. I wouldn't say the level of communication, especially in containers, is that high. And I'm going to argue that's the big one. And ship size, I think, is peaked out for the big ships, but definitely look hard at the small ships, especially around Asia, Europe. That's where the area where if you can do small ships with electric motors and batteries, you start to be into some really quite exciting territory for innovation. Is it there? Well, there's still worries, I mean, you can see why it's a bit of a nightmare. And so I reckon if I was, sort of I like the future, because any situation where it's very hard to make a firm commitment to build a new ship is going to be good for the shipping cycle, because over-ordering is restrained. You don't get too many orders. So I think that in itself is a good thing. But if you want to do something and spend money now, I think the two things you spend it on are, number one, people. Because if you're going to start any of these new things you do, you're going to be better with educated people, not just on the ship, not on shore, but on the ship. Because most companies have got far more talent in potential on the ship than in the office. And then there is now technology available to start to integrate things, which I've been talking about green energy for 10 or 15 years now, and this is the first time where you can see the technology there to actually integrate onboard ships, systems for the ships with marine Ethernet and things like that. The yards can fit that, and if you're smart, if you know enough about it to get the ships, you order your ships with integrated electronics as far as you can, or at least, very least, with the wiring to do it. And secondly, with the sort of accommodation that the next generation of people are going to want to be on your ships. Because if you look at Asia, all the people, crewing is not a very attractive business, and there are more and more, there are better business opportunities ashore. So I think the point where you start to regard the ship as an extension of the office is a very good one. Well, I'm running a little bit ahead. Am I okay for time, Nicholas? Yes. Okay, just for 5 minutes anyway. Well, so I pulled all this together, and what I would spend my money on was starting to revamp my organization, and that includes the ships as well as the office. And I'd look very hard at the technology, and the first thing I would look at was the cargo transport. At the moment, it's a very adversarial business. The spot market is adversarial, but actually, to move forwards, if you've got integrated logistics, you need to have the cargo on side. And if you haven't got the cargo on side, nothing else is going to work. So you start with the cargo. I know it's these. I mean, who am I to say whether these can be done? But I'm just suggesting it. The second is you want to run your fleet as a transport factory. And I mean, it's a bit of a glib phrase, but it seems to me that it summarizes what you're trying to do. Everybody, when I was in banking, you ran every ship individually, and you did the cash flow, and you register the ship individually. But I think from a logistics point of view, we've got the technology to start to see the fleet as an integral unit. And I think the artificial intelligence and that sort of thing is going to be very helpful in figuring out how you fix your ships and where you move them, so you can run your backhaul options way forward to see which is the best one. The third thing is integrated shipboard systems. You couldn't do this 5 years ago, and I sort of misunderstood what this was about because I'd been looking at cars, but I think now we've got the shipyards producing onboard electrical systems, Ethernet systems, which allow you to link up major critical systems on the ship in a way which allows them to be upgraded systematically without risk, in the same way that cars do. I mean, the cars' electronics nowadays work perfectly. You never have to look, with a bit of luck, you never have to look at them because they're all integrated. You then come onto your logistics system, where somebody's going to have to manage this, and in the end, it's going to be somewhere between cargo and owners that will do this, or shipping companies that will do this. The technical teams, you need people. It takes 10 years to build a decent technical team. I mean, I've tried it. You can't do it. You can't have a good technical team in 3 years. I mean, you've got to train them and get them familiar with your operations. So that's a place you start. You're going to have the systems teams who work with the technical teams, and you're going to have the ports, and will all need to be integrated into this system in due course. Overall management, and I've missed one, which is that one there, but never mind. But you get the gist. There's a lot of bits. It's a bit overwhelming, but, you know, the first person, this is quite normal in development. When you look at containerization, which I've looked at a lot recently, what a nightmare that was. You suddenly had to go from running a fleet of 200 general cargo ships to running a fleet to replace them with a fleet of 20 container ships with new terminals and all sorts of stuff. And Mr. Moller, if you look at what he did, it was a most astonishing piece of business management and well worth having a look at. But what he did was on a par, perhaps easier than the sorts of challenge that lies ahead for the leading shipping companies, according to my theory. So, new technologies available to start restructuring for the new digital era. It will take time, so why not start now? That's it. Thank you.